G'day everybody, I hope you're all very, very well. Guys, I wanted to take you through now and take you through something that I think is incredibly important but is often overlooked. Of course, Nugget provides a huge amount of opportunity for you guys to learn a lot of free content, as do I, putting content out there all the time for free. But often I think, not just between Nugget and myself, but between everybody else in the community, we often forget that we've got to start from the beginning. As traders, as investors, we can often overlook things, especially if we've been in the market for a little while and we think we know ourselves. So for a number of you, you'll already know what sort of a trader you are, and I still challenge you to watch through this little webinar or little video. Reason being is that I'm hoping that I can bring you to the understanding that maybe there's a couple of things you might want to consider to better your own trading. So this is not about trying to make you differ what you do. It's not trying to tell you what's right or wrong. It's got nothing to do with that. This video is about helping you to be better at what you're currently doing. And by asking ourselves the right questions, we often give ourselves the right answer. So the first question anybody should ask when they get started is, what type of a trader are you? Are you a swing trader or are you a day trader? And often people don't know the difference, especially when they're starting out. They ask themselves the wrong questions, they get the wrong answer. The difference between swing trading and day trading we'll come into in just a second. But the thing you've got to understand is that there might not be a right or wrong answer to start off with. Okay, you might not know. I mean, for you to come in and sort of say, whether you think you'll be good at intraday trading or longer term trading, which is, intraday is you've got swing trading and you've got intraday trading, basically. A day trader, so you're in and out of the trade within the day, or a swing trader, you might be in it for a longer period of time. Now, it's difficult to know, as I say, whether or not you're going to be either or, but that's okay, especially when you're starting out, because you want to get a bit of a go to both and see what you lean towards. Often though, when you start out, you might have a bit of logic coming into you, which is like, well, if I was to start out, maybe I would like to swing trade because it gives me more time to go through my checklist, more time to consider the position before I get in, i.e. there's no rush. But the flip side of that is you might be thinking, well, if I take more trades, I'll learn quicker, and therefore intraday trading would help my learning curve. Now, there's no right or wrong answer there. It's completely subjective. It's completely up to you. It's completely up to the individual. The questions you've got to ask yourself is, what type of a trader do I want to be? See if you get an answer for that one. The second thing you've got to start to consider is that with swing trading, we're looking to be in the trade for days, weeks, even months sometimes. And the time frames that we consider to be swing trading, or the time frames that I personally consider for swing trading, are 4-hour, 8-hour, daily, weekly. Okay, I also use a 12-hour, the 16-hour, and so on and so forth. But these are your sort of mid to higher time frames. With your intraday trading or your day trading, you're looking at lower time frames: 1 minute, 3 minutes, 5 minutes, and 15. And as much as I don't tend to do too much trading on those lower time frames, I don't tend to go below the 15-minute. And if I do trade 15-minute, I'm often looking at the top 10 due to the fact that there's more volatility and more volume. So not so much volatility, but more volume, so I can get better entries and stops, and I can get better fills. So again, it comes down to time frame. It comes down to how quickly can you think. So when you're asking yourself, what sort of style are you? Are you somebody who likes to pow, 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 take lots of trades really quickly? Are you very decisive? But not just are you very decisive, because you've got to be decisive and precise at the same time. So it's no point in just being able to make a decision. You've got to make the right decisions consistently well. And if you are starting out, you're definitely going to make a lot of mistakes. Now that's going to apply to swing trading or day trading. If you are going to start off day trading, then I would suggest you risk a small amount. Okay, if you're trading off of the lower time frames, you'll typically be getting your first target or stop loss hit earlier. So therefore, it will dictate the life of the trade. That being said, though, because I do swing trade and I do day trade, I will often look for a trade. If there's a good swing position, I might look for an intraday entry into that position. So you can start to bring the two together and mold them out. What does it mean? What's it mean? Okay, so what's the same when we're looking at trading and asking ourselves how we're going to trade? Well, it's the same markets, isn't it? I mean, cryptocurrency, whether you intraday trade or you swing trade, same markets. The only thing that may differ is that you might, when you're intraday trading, say, look, I'm only going to intraday trade the top 10, whereas you might swing trade the top 100 as an example. You look at the same strategies that you'll employ for intraday trading, they should be employed for swing trading, because you need to have robust trading strategies that are applicable to trading across any time frame and any product in crypto. And it's obviously the same sort of risk management. You can manage your risk much more tightly, which I do when I'm intraday trading, but you will be risk managing as well. The difference when it comes to intraday and swing trading can sometimes be your account size. So if you're going to look at a position where you need to have a $400 stop loss and your account is not very large, well, it might be more suited towards intraday trading as well. Okay, obviously the difference is going to be the time frames that you're trading. So again, it's about understanding what this means and what you're going through. So are you a swing trader or are you a day trader? First of all, what do you think you are? Okay, and again, this is not a right or wrong answer here. It's what do you think you are? What are you drawn towards? Some people will say swing trade, some people will say day trade. Neither of you will be incorrect or correct. You'll probably morph and change and move around, and that's perfectly fine, completely natural, and totally understandable. Okay, often people want to take lots of trades because it's lots of fun. Being in a trade is lots of fun when you're starting out. We're trying to get you to a point where it's not really an emotional journey. It's just you're checking in, you're checking out, you're checking in, you're checking out, and that's the whole repetition and methodical approach that we need for that long-term success. If you start with day trading, like I said, make sure you do start small, because you inadvertently will have more trades and likely more winners, more losers. So just make sure that you don't get yourself onto a slippery slope, because it can happen very, very quickly. The scenario is, you might have 2 or 3 losing trades in a row, and you think, well, I'll wedge up and I'll put more on this third position to get the money back. If you start to do that, you'll notice that you're starting to do things that are silly. You'll start to spiral. You become irrational. You become emotional, and it's really not going to help you. Okay, so these are the variables that you want to consider. Your personality, what are you drawn towards? Again, totally up to you. And how much time do you have to dedicate to trading? So if you're somebody who's only got a couple of hours, and if you've got a couple of hours and it's the evening, well then if you realize, okay, well the daily candle closes at 11 a.m. Australian Eastern Standard Time. Now at 11 a.m. you know you'll be at work, you know you'll be with the kids, you know you'll be doing something. If you know that it's not likely that you'll be able to go and raise an order on the daily time frame, then that's fine. You wouldn't look to trade the daily time frame. If you've got a couple of hours in the evening when you get home from work, the kids are down, whatever it may be, then maybe looking across 15-minute, 2-hour, or 15-minute, 1 hour, 2 hour, 4 hour, and 8 hour, depending on if that candle closes around that time. So you can also try and structure what time frames you'll trade based on when those candles are opening and closing, to work out how you can best position yourself to have the best, the best opportunity for finding trades. Due to using higher time frames, you've got more time to find trades if you're going to swing trade. It tends to be not as intense because you do have more time. It's not like you need to pull the trigger in the next 30 seconds before that 1 minute candle closes. It does suit people a lot more in many walks of life. It depends on your personality, but I've found that a lot more people resonate with swing trading just because you can have less trades open. You can leave them run for longer. So if you like to be in a trade, that's fine, but just be in a trade for a longer period of time rather than always having to pick up a new one, because that can sometimes force you to take some poor trades, and we don't really want to do that. Slippage and spreads are not as bad when you're swing trading, and slippage is when you might want to get filled at 500 but you get filled at 501 or 510, where you can't actually get the position size that you want at that exact level. If you're swing trading, you'll tend to have a smaller position because the stop loss is larger and therefore your risk isn't quite as bad. So the slippage doesn't affect you quite as much as what it does when you're intraday trading. Trading of the higher time frames makes you less susceptible to crazy intraday spikes and whips, and guess what? We know they happen. We've seen them, we see them all the time. You see it go up or down. Sometimes that's fantastic because it hits your target and you get filled. Other times not so good when it hits your stop. But part of the strategies and what we do, part of the training and part of the way you trade should be around mitigating that risk by not trading charts that don't have optimal chart structure. With crypto being such a crazy volatile space, it's often good to have a bit of space with your stop loss. That's why swing trading does allow that. It is good for that. On the flip side, why would you day trade? It's often good to work on the high market caps. So like I said, the top 10. Bitcoin, Ethereum, I am good to go on that. Ripple too. Nice big volume, nice big market cap, nice big order books. There's no time to dawdle. You need to make fast decisions. Some people like that. That's the environment that they thrive within, and this will be more suited towards those people. It's really good for smaller accounts, just because you've got less, smaller, tighter stop losses, so you can manage your risk a bit easier. Due to a larger number of trades that you're actually taking, it can, this is a double-edged sword too, by the way, it can increase your learning curve as long as you learn. Taking lots of trades doesn't teach you anything unless you're testing them, measuring them, assessing them, reporting on them, and actually trying to learn from those. I mean, talking live screenshots and monitoring everything. It can speed up the learning curve. You can either profit or lose very, very quickly because it's a tighter stop. Now, this can be good for people that don't like to go to bed with a trade open, and this does have an effect on the psychology of yourself. It is part of the psychology of trading. If you're not comfortable going to bed with a trade open, well, intraday trading is probably going to be quite good for you. So, guys, that's the little chunk I wanted to give you. It's not about the ins and outs of market. It's not about how to trade. It's not about where's your entry, where's your stop, the cradle zone, the Bitcoin breakout, moving averages, MACDs. It's not about any of that. It's coming back to the core, coming back to what is it that we're trying to achieve. We're trying to achieve consistency. So we need to ask ourselves and build a solid foundation for us to actually back ourselves into our strength corner. All right, we want to know, okay, if you don't like the stresses of life, if you don't like the high octane thriving economy where everything's just pumping, and you've got to be switched on 24/7 and plugged into the eyeballs, then swing trading's for you. But if you are somebody who loves that adrenaline, who loves to feel that desire that there's lots of trades happening all the time, it's just pump, quick thoughts, very, very intense. If that's the environment that you thrive within, then of course you naturally want to come towards intraday trading. Now, there's nothing wrong with trading intraday and swing trading, but what we want to do is understand that there is a difference between the two. Try and match your personality with the style of trading that is best suited to that, and that's going to ensure that you've got a much higher probability of success going forward. So guys, I'll continue to put out more of these little lessons and snippets. This is a really good place to start because it gives you what I consider to be a very important foundation, and we'll build from here going through more and more. Guys, I hope you have a fantastic day. Speak to you again very soon. Bye for now.